So what is that one career advice which you would like to give to everyone so that they can also have a very good growth in their career trajectory?
There is a lot of commentary around the fact that, hey, if you are going abroad, then the expense is a lot. That is not necessarily true.
So if there's a dip, whether you will just straightforward invest, or what's your investment thesis like when it comes to investing in equities? Hello everyone, welcome to series Konversation with Kushal once again. Today I have with me one of the guests who genuinely does not need any introduction at all. I am very sure that you all would be following him on YouTube, and he makes amazing videos on finance topics like stock markets, cryptocurrencies, NFTs and whatnot. He's none other than Akshat Shrivastava. Thank you so much, Akshat, for taking out your time. It's an honor to host you on my channel today.
Thank you, Kushal. Appreciate it. Such a warm welcome. Really means a lot.
Absolutely, Akshat. So Akshat, quickly in a minute or two, can you just brief about your professional journey? How has it been overall? And then we'll take the further questions ahead.
Sure. So I've experimented a lot with my career. I actually started my career when I was 14 years old. So I used to be a semi-professional cricketer. So I played for under 14, under 16, under 19 state cricket teams. Then, talking about core profession, right? Then I started my career in non-profit, right? So that is where I got started. And then I worked in consulting because that was a natural progression, moving towards social impact consulting. So I worked in social impact consulting with Government of India. So I worked with the Ministry of Rural Development. Then I worked with BCG for a little bit, and then I did my MBA from INSEAD. Joined consulting. Then from 2018 onwards, I have been an entrepreneur, investor, and bunch of different things, right? So that would be like a broad introduction about from a career viewpoint.
Right, that's lovely to hear. And in terms of being an investor and entrepreneur, would you be able to share what are some of the projects you're currently working on?
Sure. So I make investments. So I've been making investments since 2019 onwards, right? So there are a few companies that I myself have started. For example, Cases Over Coffee, my MBA journey, which have clocked in over $1 million in revenues, both. So those are some of my projects that I have worked on previously. I'm currently working on a project called as Wisdom Hatch, right? So it's again an education-based company, right, that I look after. And there are a series of investments. So far I've made 9 investments, right? So ranging in Fintech, EdTech companies. For example, a couple of companies that I've already disclosed. One is Totality Corp, one is Vint Wealth. So these are some of the companies in which I have become an investor.
Right. So in fact, day before yesterday only, I interviewed Anshul Rastagi, founder of Totality Corp,
nice.
And he was mentioning about you. He was just talking about metaverse, etc. Of course, in the second half of the video, let's chat about cryptos and metaverse as well. We'll discuss about your views as well. But before getting into that, so tell me one thing. Even I come from a venture capital background, and currently I'm working in Aditya Birla Ventures, which is a VC fund of Aditya Birla Group. So again, quite similar, we invest in fintech, edtech startups. So just wanted to understand your view, what would you consider before investing in a startup, and broadly, what goes in your mind before investing in any startup?
So I think in fintech, one of the so the way I see it depends on the idea specifically, but I think one of the key concepts is that number one, in fintech or edtech, the idea should be simple enough to understand. They should not be doing multiple things. The focus should be very clear because the customer stickiness is there. So that's one. Usually with fintech, edtech companies, the customer switching cost is very high. For example, if someone signs up with a particular company to operate their crypto account or operate their trading account, then what happens is that they will not switch. For example, if you have a Zerodha account, then it is highly unlikely that you will move towards another platform, right? That switching cost is very, very high. So I would look for clarity. I would look for that focus, right? Founders is the number one thing that I would look for, what the team does. So idea and founders, these are 2 critical areas. And then, then after that, you go by gut, what value you can add as an investor. So these are some of the points, rough points that I would speak about.
Right, got it. Makes sense. And I think investing in the founder makes a lot of sense. And ultimately, if you're betting on the founder, and if the founder is going to add value and you think that he's going to make something big, product can become secondary. So even that is an approach which a lot of VC funds also follow, the founder's first approach. And I think that makes a lot of sense. You also stated that you did your MBA from INSEAD, and I'm sure a lot of people would have asked you this question. But like I am asking from my personal perspective itself. So this is common, and this was the question which was asked by a lot of audience when I posted on my Insta story, YouTube community, and Twitter handle as well that you are going to come for my interview. So this question, like I wanted to ask from my personal front itself. What do you think, like MBA, doing an MBA from, let's say, an Ivy League or from outside India, there's an opportunity cost involved in terms of 2 years of your huge time. Let's take an example. If a person who wants to get into entrepreneurship, or if he wants to start something of his own itself, what value does an MBA add in that person's life, considering the fact that he wants to get into entrepreneurship in the future, and given the fact that 2 years of his crucial lifetime is going to be gone in the MBA period?
Right. So first and foremost, there are shorter variants of MBA program. For example, INSEAD is a 10 to 12 month MBA program. So it's not necessarily 2 year, and majority of the good European colleges are shorter duration MBA programs. For example, if you consider London Business School, then it is between 18 to 21 months. If you consider something like Oxford or Cambridge, that is 1 year again, right? So that's point one. Point two is regarding the utility of an MBA program for aspiring entrepreneurs. I think business schools are doing a lot of useful work on this front. One is that the curriculum itself at top tier MBA programs, it's getting geared towards entrepreneurship. So that's one, right? Second is that there are numerous resources that business schools are providing in terms of helping you kickstart your entrepreneurial journey. For example, INSEAD has a seed fund. Now I as an alum can get access to that seed fund in case I need the money, right? So that is another key resource that the school offers. And third, and the most important thing is that basically if you have done an MBA from a good college or any degree from a good college, it acts as a signaling effect, right? For example, if you're looking to raise money for your firm, or if you're looking to reach out to people in terms of expanding your network, or seek any additional help for your business, then all those things do add up, right? So I would say that from a return on time perspective, that if you're spending like a year at an MBA program, depending on a lot of things, I think it's not a bad investment from that particular perspective if you're going to a good college, right? So I mean, that's the bottom line.
Got it. Makes a lot of sense. And anything which you would want to touch upon in terms of MBA in India versus MBA outside India? Like what are factors to consider before making this decision?
See, what I would say is that it's a personal choice. I would say that, people who are looking to get good experiences, or rather different experiences. For example, when honestly, like it's like a decision that, for example, if I say that, hey, do you like Indian food or Chinese food? It's a personal preference. I can't comment on the fact that, hey, whether you should like Indian food or Chinese food. Similarly, I can't comment on whether you would want to work abroad or live abroad or experience abroad. If that is something that you like, you see value in it, it's a personal preference, then definitely going abroad makes a lot more sense compared to doing an MBA in India, right? That's point one. Point two, there is a lot of commentary around the fact that, hey, if you are going abroad, then the expense is a lot. That is not necessarily true. For example, I got a lot of scholarship from INSEAD. It depends a lot on your GMAT score, how you have built your profile, how are you writing your essays. There are a lot more opportunities in terms of scholarships available abroad, right? And I've had like clients in the past who have received like 100% scholarships from schools like INSEAD, schools like Oxford, Cambridge. So that cost argument is something that dissuades a lot of people from going abroad. So I just wanted to clarify that. But more than anything else, just focus on going to a top tier college. That's the bottom line. And yeah, post that, it's just a personal preference thing that whether you would want to work in India versus outside India.
Right. Makes a lot of sense. And just like before getting into the hot topics of stock markets, cryptos, etc. Like one last question on the career advice front itself. So a lot of my audience who are watching this video are in their 20s or like just started their careers, who have embarked on their professional journeys. So it's like they've started working in a corporate life. So what is that one career advice which you would like to give to everyone so that they can also have a very good growth in their career trajectory?
See, no bullshit advice would be that work really hard, right? And don't worry too much about work-life balance at the start of your career, right? You will eventually figure out work-life balance. Because see, if you are from the middle class, you have to fight your own battle. Unfortunately or fortunately, from that perspective, you don't have backers, right? So when you're stepping into the corporate world, you have to fight your own battles, and your hard work, focus, determination is what would define things. I see a lot of commentary on LinkedIn that, big CEOs talking about work-life balance. All that is fine, right? I'm not discounting their viewpoint, and I'm saying something controversial here. Uh, it's fairly simple, right? I mean, your career exists in a flow, right? So at the start of your career, you have a lot more energy, and if you have to fight your own battles, try to front load it. Work really hard at the beginning. The skills that you will build, that will compound over time and give you numerous returns for a longer lifespan, right? So that is what I would say, and that is my piece of advice. Everyone would again have their own perspective on this, that how, whether they should go after passion, work-life balance, is that. I would say that try to excel, work really hard. That is what I would recommend, right? Because the rest of the other things takes some trial and error, right? I mean, in terms of discovering your passion or figuring out what you want, finding work-life balance, all these things will happen with time. But at the start, if you're asking me for one tip, work really hard and excel. Yeah.
No, that makes a lot of sense. And since you talked about passion, so just this question clicked to my mind right now. So what made you transition to leave your job and then you went into entrepreneurship and then like just following your passion as of now? So what was that trigger point in your life? This might help a lot of people.
So, right. See, honestly, it's not as if that God will call you and tell you that what your passion is. Honestly, like I was always experimenting in terms of teaching. So I started teaching when I was like 19, 20 years old, around 20 years old, right? So I used to professionally teach for GMAT, right? That is where I started my teaching career, and I had paid clients, right? So I used to take one-on-one classes. So I figured out like very early that I enjoy teaching, right? And whatever ventures that I ended up building, right? I mean, my initial set of ventures, it was focused in and around teaching in a way, right? So, and then subsequently I started investing in education focused companies, finance. Even what I do on YouTube is teaching. So my passion was teaching. It is just that I explore different avenues and facets to teaching, right? So to say. So
Right.
yeah, I mean, there's no good answer that, how did I figure out my passion? There's that. I mean, I enjoy teaching, so I started teaching. That's a simple answer.
Right, absolutely. But what happens nowadays is that people are a little scared in terms of leaving their job and let's say getting into entrepreneurship because they have some amount of fear of failure. And at some or the other point of time, they feel sometimes that if they just go on following passion and if there's no fixed source of income, so these risk averse people, that is a thing which is happening nowadays. Like just not leaving their jobs in order to follow their passion entirely. And I think, that's a personal choice, of course. We can't comment on that. But having said that, just wanted to enlighten this fact that it's important to follow your passion at the same time, irrespective of the fact that you're doing or working somewhere or the other. That's the point which I wanted to make. So just getting into the stock markets now, your favorite topics about finance and all. Of course, you're an expert here, and I am nothing nothing compared in front of you when it comes to stock markets, etc. But I watched your recent podcast with Ankur Wariko, and you had mentioned that 80% of your portfolio is into equities, 10% is into cryptos, and 10% is into real estate. So now, like, we have also experienced a recent market crash which happened a few days back, and there was a dip where people were just saying like, if you want to invest, you can invest, etc. But tell me one thing, how would you identify these kind of investment opportunities? Talking about the 80% equity part. So if there's a dip, whether you will just straightforward invest or what's your investment thesis like when it comes to investing in equities?
Right. So the investment thesis is very simple. That number one, it is not possible to predict the market, right? I mean, you have investors like Mr. Ramdev Agrawal, Rakesh Jindal, Warren Buffett, everyone, right? I mean, in crash, everyone's portfolio suffers, right? So it's not as if that these people are able to get out and then, when markets start correcting, they will pump in the money again. It doesn't work that way, right? I mean, if you take a look at the history, the portfolio history of any of these investors, their portfolios have also gone down by 30%, 40% in crashes, right? So that's not uncommon to hear. So number one piece of advice is that number one piece of my theory would be that I would stay invested in the stock market. Almost 90% of my money, whatever I want to invest, will always be there in the stock market, whether the markets are going down, up, sideways, whatever, right? So that's point one. Point two is that you should invest in good businesses, right? That is the central goal. Everyone would have their own thesis of what a good business is, right? So for example, if I see a company winning in the market, by winning I means that it is going to stay as a market leader for a foreseeable future, right? For example, if we consider something like Hindustan Unilever, now they have built business proposition or they have built business attributes in such a way that it is very difficult to beat them. So I would go and buy such a company, right, whenever possible and as often as possible. So that is my theory number two. Number three is that price is a very difficult thing to predict. No one can do it. Everyone can keep on guessing what the price would be, whether prices should be X or Y or valuation should be X or Y. Bottom line is that if Professor Damodharan can't do it correctly, the valuation exercise, right, and he gets it wrong, and he has been teaching valuation for years, right, and he's the guru of valuation, then you and I can't value a company and we can't say what is the right valuation for a particular company. So I would not worry too much about price valuation. If the business is good, just go buy it. If there are some opportunistic things that you can go and do, for example, if certain things are available at a very inexpensive price or for some reasons, then I will explore these type of opportunistic scenarios. Fourth and finally, I am the type of an investor who is open to, I'm just not taking pot shots at anyone. I'm just talking about me. And I'm the type of an investor who will openly say that, hey, if I'm changing my mind about something, I'm very open to changing my mind about things. That's not an issue at all. It's not as if that I'm flip-flopping. It's just that you get new information and you act according to it. So I'm a very data-driven person from that perspective. These 4-5 things.
Right, makes a lot of sense. And some metrics, let's say like 3-4 metrics, which you'll for sure see in every company before investing in that stock.
So I'm the type of a person who would analyze business and I would try to figure out the defendable moat of the business, right? Other than that, I don't care too much, right? So for example, if I feel that, hey, there is just no way that Amazon can be beaten right now, then I'll go and invest in Amazon and I'll wait for a few years for the stock to give me returns, right? So that's the simple approach that I would take. That's the simplest approach that I would take. I'm also a highly diversified investor. For example, right now, if we talk about conventional banks, I would not sit and analyze like what is the NIM, what is the risk on the asset side, what is the liability issues with major banks in India. I would not, right? I mean, I would simply go and buy all 3 or 4 major banks in India and I'll be done, because I genuinely don't see any difference in terms of how HDFC is acting right now vis-a-vis how ICICI is acting right now. For me, right now, I'm saying, I'm not talking about like 5 years ago or 10 years ago. Right now, I'm saying that, hey, what is it that ICICI is doing that HDFC bank can't do fundamentally, or vice versa? If they are doing the same exact things, then eventually like 5 years from now, they are going to get almost similar results. So I would rather diversify my income in these type of companies and invest. So these are some of the key things that I would,
Got
look
it.
at. Yeah.
And since you now mentioned about banking industry as well, so HDFC Bank and ICICI Bank are like 2 of the stocks in banking space as well. So would your thesis look at an industry specific per se, and then after identifying the industry where you are bullish upon, then you'll find the companies, or will it be a bottoms up approach where you'll find the company and then look at the industry attractiveness?
So I am a macro investor, so I start with the macroeconomics first and foremost, right? So I look at the macroeconomic situation. Number 2, I will then look at the industry, and then third, I'll go stock specific. My overall intent would be that, hey, what is it that this company is doing that will make it different from others right now, right? Not the history, not the future. Right now, what is it doing that makes it different, or what is the current moat of the company? If that thing is clear, I will become an investor.
Got it. Makes sense. And in fact, in the Union Budget 2022, there were a lot of incentives which were announced for various industries as well. For example, allocation of 19,500 crores of the PLI scheme in the solar power sector, which is a boost in the renewable space. Then there was this battery swapping policy, which will boost the EV sector as well. So any specific sector where you are bullish upon in the Indian economy, where you can bet like this is going to be the future, or this is a sector where I am going to invest?
So honestly, I don't care too much about budget, right? And honestly, you told me these things, so I learned about that. These things have been announced in the budget. And honestly, think about it this way, right? I mean, it's not as if that solar energy or the EV sector is something new. The narrative has been going on for at least 10-15 years. You had entire run-up in companies like Suzlon Energy based on this renewable sector play that the government was doing, and it has been doing it for a decade, but nothing changed with companies like these, and they have actually turned out to be wealth destroyers. If someone would have invested their money in Suzlon Energy, they would have lost money right now, right? So from that angle, I don't think that government controls businesses. The government's job is very simple: not to mess up. That's it. That's what the government does. Government is not, it's not because that government took incentive, therefore the IT revolution happened in India. IT revolution happened in India because you had people like Mr. Narayan Murthy, Mr. Nandan Nilankani. They came with the foresight, they understood tech, they built companies. Once we started seeing results, that's when government jumped in and started lending support, right? So there are two very different things. So government is never the facilitator. So I don't look at too much of government action because whatever, they are not driven by incentives, right? I mean, they are driven by reaction, right? So incentives are driven in the private sector. So look at what private sector players are doing. That is a much better indicator for investment decisions according to me.
Got it, got it. And in fact, in one of your latest interviews with Mr. Saurav Mukherjee, which I was just watching it last night, so he had specifically mentioned about the importance of reading annual reports. And Salil Desai, in your interview, had mentioned that it's very important to read at least last 3 to 4 years of annual reports. In fact, they at Marcellus, they read like for the last 10-15 years as well. That's the amount of research they do. So any take on that in terms of how can an investor just read the entire annual report with some good tactics, because annual report is very wide, right? So there are a lot of sections like management discussion and analysis, financial statements, auditors report, board of directors, etc. So any specific strategy which you would recommend to all the investors or all the viewers who are watching this in terms of how can they expedite the process of reading an annual report?
Right, so I would say that look for point of differentiation, right? When you're reading an annual report, just look for what makes ICICI Bank different from HDFC Bank. To me, nothing, right now. If you read 3 years of report between HDFC and ICICI Bank, and I would encourage you to comment in the comment box, right? I mean, how is HDFC Bank right now different from ICICI Bank? What is that one thing that HDFC Bank or ICICI Bank is doing that the other bank can't replicate? Yeah, please comment, right? I mean, I'm happy to hear your viewpoint on this, right? So if there is nothing, then I can pretty much go blind. Reading like last 10 years report, it will not give me any useful thing, right? Because that is where the industry is going. So everyone is going with the flow of the water there, and everyone will end up getting similar sort of results, right? So I'm not saying that that's bad. Banking will grow if the Indian economy is growing, and I as an investor would just simply go and diversify my investment across each of these banks. So yeah, so I mean, that's one tip that I would have in terms of reading annual reports.
Got it. And let's say like for a person who is in his 20s, let's say like for a person like me, like at the age of 22, what asset allocation would you ideally recommend in terms of, let's say, between equities, cryptos, debt, bonds, etc.? So what kind of asset allocation is ideal according to you? I know like there are a lot of other people who have different opinions as per like there are various rules, 100 minus age, etc. But according to you, what is that perfect allocation mix?
See, I think so. If you observe from a macro point of view, there are 2-3 things that are happening. So one is that the crash cycles are getting shorter, right? So that's one. Number two, post 2008, the Fed actions or the government's action has been very proactive in terms of averting the crisis. What I'm getting at, why I'm pointing to these facts is very simple. That due to government intervention, excess printing of money, bunch of different things, you have no other option but to invest in inflated assets, right? For example, take a look at 2021, 2020 hit, crash happened, government printed a shit ton of money, put it in the stock market and bunch of different asset inflation happened for all the asset classes. So if you are not a growth investor and if you're a defensive investor, you will lose money, right? And this is a game that will continue. This is my hypothesis, I can be wrong. But the way I'm seeing it is that these macro trends indicate that going forward, if you're not a growth investor, you will lose money. So you have to be an aggressive investor by default, right? So I would rather say that if you are a young student listening to this, then you should become like a growth investor. You should become like, you should become a risk taker. It is very similar to the cricket analogy, right? For example, if you go back to couple of decades back, right, when Ajay Jadeja, Rahul Dravid, Sachin Saurabh used to play, teams used to make 300 runs only, right, max. If you are making 300 runs in a 50-over match, you will 99.99% win, right? These days, if you are making 300 runs in 50 overs, you are 60-70% going to lose, right? So that's the scenario. So because the game of cricket has changed, similarly, the game of investing has changed also, right? The rules have been changed because of macro changes, and therefore you have to become a slightly aggressive investor. That is my viewpoint. I can again be wrong.
So
asset allocation, I would just simply say that.
Yeah.
So and just a small correction. So my asset allocation is that I'm 80% equity and almost like 10 to 20% crypto, very little real estate. So that's my portfolio mix.
I think this has changed over the last 4 or 5 months because in Ankur Varigu's podcast I did that.
Yeah, 10 to 20. Yeah.
Got it. So again, like since your 10 to 20% is in cryptos, now let's delve into that hot topic of cryptos as well. In a podcast, like in podcast with Ishan Sharma, also you had mentioned that you're very bullish on cryptos. Even in podcast with Ankur Warikoo, you've mentioned that crypto is going to be the future. So now, like Union Budget 2022, again going back to the hot topic, like 30% taxation has been imposed. So there is no set off on the losses on cryptocurrencies. If you're earning profits, you have to pay 30% to the government flat. And this is a move which is going to, of course, like not eliminate, but at least reduce the transactions in cryptocurrencies because of higher taxation and no set off. So government has not yet said that it's legalized, but it has at the same time not yet said that it is going to ban cryptocurrencies. So firstly, what's your take on this stance by the government that putting a flat tax of 30% on cryptocurrencies? And secondly, what do you think is going to be the future for cryptocurrencies, especially considering the fact the regulatory uncertainty which is going around?
Okay, so 2-3 points, and again, these are controversial viewpoints. I don't think there is any regulatory uncertainty, right? I think US is very favorable about regulations. And if you have companies like Coinbase, which is working in conjunction with Securities and Exchange Commission in the US, and it's a listed company, it means that US is favorable. In the US, the publicly listed companies are buying cryptocurrencies and bitcoins more specifically. Governments across the globe have purchased approximately 27,000 bitcoins, right? On top of that, if you look at the adoption of adoption of Bitcoin especially, then it has been on a rise. Approximately 30 to 40% people in the US or taxpayers in the US, they own some form of crypto. So US government, in the US, there is no opaqueness in terms of regulation per se. The only thing left is that the government comes and they announce that, you know what, come crypto, we'll hug you, right? So they are never going to do that, but this is as good as it gets. There are ETFs that are listed on NASDAQ, crypto ETFs that are listed on NASDAQ. So it is as good as it gets, right? So that's part one. Part two is that I feel that the Indian government is behaving as if that they control cryptos, right? Unfortunately or fortunately, whether you like it or not, whether you want me to say it or not, Indian government does not control cryptos, right? It's not a boundary-oriented asset that a government can come and say that, you know what, this is what you can do within our own set of borders. This is a decentralized currency. You can't do anything with it. Now, I'll be happy to go into the details of that 30% taxation, but the topic will become highly complicated if we get into DeFi and bunch of other different things. But I'll explain the broad concept here. At the moment, for example, government can regulate something like Zerodha, or government can regulate something like ICICI Bank. Government can regulate some crypto exchange that works in India because these are somewhat centralized. I'm using the word somewhat centralized. But government cannot regulate something like Uniswap, which is a completely decentralized exchange. And majority of the people giving commentary on this taxation thing do not understand how Uniswap works. And you can't instruct Uniswap to share their trade books with the Indian government. They don't care, right? You can't even get hold of them. That's a smart contract that is not run by people. You can't do anything with that, right? So that's the bottom line. So this entire debate about 30% tax laga denge, 1% tax yahan kar denge. I'm not a CA and I do not know about taxation from that perspective. But honestly, government can't tax if it is not in their gambit. And cryptos, unfortunately, are not in a nation's gambit per se. It's a decentralized currency that is driven by the sentiment of the entire world, right? And there are numerous loopholes, right? Right now, for example, think about this, right? You are a CA. GST has been a mess, right? In terms of small businesses. Till now, there is no clarity. Government keeps on issuing orders after every month that, hey, now this change has happened. Now that change has happened. They keep on doing it, right? And I'm not like making this up, right? And it has been in existence for such a long time. Now you tell me, crypto is much more complicated, and how are they going to settle the taxation de facto, right? In theory, you can create whatever, and speeches you can give whatever, but de facto speaking, how you can regulate it sensibly, right? So that's the bottom line there.
Got it. And in fact, you would have read about the introduction of digital rupee also, which the government is planning to make. So that is a central bank backed digital currencies, which is popularly called as the CBDCs. So any thoughts on that, whether this CBDC will replace the private cryptocurrencies, or what would be the impact of this digital rupee or digital currency on these private cryptocurrencies?
So honestly, again, looking at the logic, see, there are certain things that are said to make you feel good, and then there are certain things that are actually good, right? So there are two very different things, right? So just because everyone is talking about cryptos, just because people want cryptos or do not want cryptos, or if the government just wants to sort of make the announcement, right? So they will say that, hey, we are launching like CBDC, right? So yeah, that's that, right? Now think about it this way, right? For example, if you understand the concept of money right now, majority of the money, it's not as if that you are keeping it. You get a salary of, hypothetically speaking, 1 lakh. It's not as if that you withdraw it, keep it under your bed, right? That money is virtual money, right? Where is that money stored? That money is stored on a node that is controlled by the RBI in India. They make ledger changes on that computer node, and it just indicates that Kushal or Akshat has this amount of money done, right? So the money, the fiat money, is already virtual. It's already controlled by RBI, which is and is backed by the government. So how is this different from the central bank digital currency, right? So that's point one. Point two is, you will say that, okay, you know what, you can use it probably to do like cross-border transfers, all that stuff. Yes, but why would people accept the Indian version of virtual currency or this particular token, right? The only difference is that this central bank digital currency is built on a blockchain. That's it, right? The current version of money, I think it is built on the internet, but the virtual money that you see, the ledger system, CBDC will be built on blockchain. That's it, right? But in order for blockchain to be meaningful, you need to get developers, you need to have people to use it, and people will use it, or developers will create more stuff on that blockchain only if they see certain incentive on that particular mechanics. And unless there is an option of getting decentralized or enough incentive for people to come and use it, why would people use it, right? For example, if I have an option of using something like Uniswap, or if I use like a decentralized currency like Bitcoin, which already has an acceptance all across the globe, why would I use the Indian version of virtual currency? I'm already using it, right? I mean, almost all my money is in bank. Whatever I don't have in cash is virtual money. So yeah, I don't see like any logic behind it.
Got it. So all in all, your point is that like these virtual currencies are nothing but the normal fiat currencies only. So there's no value addition in terms of using them, because I'm already using that currency as of now. So
see, it's a slightly more nuanced perspective than that, because a lot of people will sort of start commenting now from that perspective. It's a more detailed discussion. The only thing is that the CBDCs will be built on blockchain, and you are assuming that because government is backing a certain blockchain network, the usage will improve. But no, philosophically speaking, that is not how cryptocurrencies projects work. So you will see fewer developers and fewer active users for such things. For example, classic example would be that Mark Zuckerberg tried to launch a cryptocurrency called as Libra, and that project failed. Why? Because no one trusted Mark Zuckerberg. Why? Because he was decentralized. He was a centralized person, right? Same logic will be applied here, that a government is trying to launch a centralized currency in the crypto world, so to say. But that project again will find no users. There is no real usage of that thing. I, as a crypto investor, will not invest in it.
Got it. No, makes sense. I think we've discussed a lot on stocks, cryptos, technical topics. So just a couple of generic questions before we get into the so-called rapid fire round with you. So like in terms of managing this entire thing, you are like handling your YouTube channel. You also invest in startups. You're an entrepreneur. You just mentioned about all your projects. So it becomes very difficult after a point of time to manage so many things at the same time. So what is your secret sauce to managing your time so effectively?
See, I mean, honestly, it's like prioritization. So you just need to prioritize well, right? That's one. Second is that you must be focused, right? So you must do things with an intent, right? So if you're spending your time intently, then a lot of time gets created. So yeah, I'll keep the answer short there.
Yeah, I think that makes a lot of sense. So in fact, even I suggest the same thing to my audience, that focus on time prioritization, and ultimately that's going to lead you to time management. So setting 1, 2, 3 priorities and not focusing at all the 3, but just trying to achieve one each after the other. So that's the advice which I usually give to my audience. And I think time prioritization is a thing which ultimately leads to time management. So that makes a lot of sense. And in terms of, a lot of people want to achieve financial independence at a very young age, and now like it's been a trend that people just want to be financially independent and they want to become something out of themselves. So what would be your definition of financial independence? When would you say that a person has achieved financial independence?
See, to each his own, right? But what I would simply try to say is that See, when you don't feel obligated to work, right? I think that is one part of financial independence, that you don't have to work just because someone is like paying you money, right? So you get a choice to pick the projects that you want to work on. Second is that you are time rich, right? So for example, it's not as if that you're running from morning to evening, just, running on the treadmill all day long, try to accomplish tasks. So if these two things are done, right, you don't feel the need that, hey, I need to take on additional work unnecessarily, or I can say no to good opportunities also. That's a part of financial freedom. Number two is that you are time rich. You are not running day in, day out to make ends meet, right? So I think these two things, when you start seeing some positive indication towards it, that would be financial freedom in a way. And finally, it also boils down to the liquid cash that you have, right? So for example, apply the 4% withdrawal rule, right? So in finance, so read about it, Google it, right? So you will understand more, and that can act as an indicator of when you could potentially retire.
Got it. Thanks for that as well. And in terms of reading habits, so I've been an ardent follower of yours as well. And you read a lot, like you've said in a lot of interviews and even in your videos that you read a lot in terms of even be it books or any other things. So like I'm a person who's very lazy when it comes to reading books or reading newspapers. So it's like, I mean, of course it's very important to read and stay updated with what's happening in the economy. But what would you like recommend, or how would you just let me know that how can I expedite the reading speed, or probably what would be the value addition for me if I start reading very effectively, or like what would be the value add for that?
See, it's not about like how many books you're reading, it's about how much you're implementing out of those things, right? I don't read too many books, right? But whatever I'm reading, I'll read it really well, and I will reread a lot of things that I've enjoyed reading, right? So that's one. Second thing is that I will keep on understanding about the trend and keeping an open mind about things, right? For example, at one point in time, there are a lot of meme-based tokens which did not make any sense to me. But when I started understanding the fundamental value, so to say, of that thing more, started understanding the psychology behind why people are buying it more, it's something that I changed my mind about it a little bit. I'm not a Shiba Inu investor, by the way, right? But I at least acknowledge the fact that, this trend is picking up. I should at least be open-minded to understand this trend, right? So I think having that open mind, having understanding that you don't need to read too much, right? You just need to read with an intent, with an open mind, then things will start to sink in more, right? So you are going after things to sink in rather than, aggregating like 500 books. That doesn't help, right? So no one can read that much, right? Unless you are like Bill Gates or something.
No, thanks for that piece of advice as well. I think it was an amazing conversation with you, Akshat. So had an amazing time. So let's get into the rapid fire round as well. So here the rules are that you have to be very spontaneous and you have to be very quick. So I'll ask you like just a set of questions, and probably in one word or maybe in one sentence you can just give their answers, and you have to be very quick. That's the only rule. And the rule is that you won't be allowed to skip the question. That's another rule. And in case if you want to just let me know. So let's begin.
Right.
Awesome. So first one. So one thing that no one knows about you.
That no one knows about me.
Yeah.
I don't think there is any such thing that no one knows about me. Someone would know something about me, either my parents or my wife, etc. So yeah, no answer there.
Okay. Content creation or management consulting?
Content creation.
Got it. If social media
Should I also
got
explain
banned,
the rationale? Should I also explain the rationale or no?
yeah, I mean if you want to in a minute.
All right. It's okay. Because content creation, because it allows me to bring in management consulting aspects into content creation, not vice versa, right? So therefore.
All right, makes sense. If YouTube got banned in India tomorrow, what would you do?
So I'll still continue to teach, right, in whatever capacity I can.
Got it. Investment you made because of fear of missing out. Is there anything you've made because of FOMO?
Investment that I made for the fear of missing out. I can't be quick because I have to scan through my portfolio, right? So this is not something that I can quickly think about it. I think Deepak Nitrite was DMart was one, right, where I did that, right? Little bit of money in that. So yeah.
Got it. If you woke up as the following people tomorrow, what would you do? Elon Musk.
What would I do? I'll start like the next some cool idea. I don't know what that idea should be, but yeah, something cool.
Rakesh Jhunjhunwala.
I'll get into crypto. I'll start investing some of my money in cryptos. So, yeah.
And Bill Gates.
I think he's already doing everything, man. I mean, what can I say? So I think I'll I don't know. No good answer there. So,
Okay. Your favorite finance content creator on Instagram?
honestly, I don't watch Instagram, to be honest. Right? I
Okay.
mean, I'm like
So on YouTube?
I don't know. So on YouTube, who's my favorite finance content creator? I think Graham Stephan is good, right? So I watch him sometimes. So that would be one. So, yeah.
Got it. One thing you would like to change about the creator economy?
I think if we get an opportunity to interact more actively with the audiences or more meaningfully with the audiences, I think that will be useful, because YouTube comments can,
Correct.
it could be like spam and whatnot, right? So yeah, that's the point.
No, that's wonderful. I mean, I really appreciate this one. So react in one word to the following: stock markets.
Yeah. Calculated gamble.
Finance.
2 words, whatever, right? So
Yeah, it's okay. Finance.
finance, important. That's what I would
Okay.
say.
Passion.
Exploration.
Okay. BCG.
Best top 3. Best in top 3. So, yeah.
Non-fungible tokens. NFTs.
Future of investing.
Choose one from the following: YouTube or Instagram.
YouTube. I honestly don't
Yeah,
spend
yeah.
any time on Instagram. So I don't know.
This was evident. Ethereum or Solana.
Ethereum.
Okay. BCG or Dalberg.
So Dalberg. So,
Degrees or skills.
skills.
Okay. And last rapid fire question: would you want Zain to become a YouTuber?
Yeah, so I mean, I don't mind, right? I would want him to become like an artist, more in some capacity or the other, right? For example, stand-up comedian, right? Writer, traveler, whatever interests him, right? But something on the art side, because I feel that artists are very honest people, right? I mean, they just say whatever comes to their mind. They don't overthink and things like that. So I think that's one aspect that I've always enjoyed interacting with a lot of artists. No disrespect to like other professions per se, but that is one thing that I like about artists specifically. So, yeah.
No, absolutely makes sense. So thanks a lot, Akshat. I think it was too much fun, even in the rapid fire round. And thanks for being so candid and frank throughout the entire conversation. I'm very sure that all the audience who are watching this video, they are going to gain a lot of value. And thanks a lot for inspiring me personally to create more videos on finance and more videos like on other topics as well. So you've been like a mentor, like an inspiration to me, and I just look up to you when it comes to creating any form of content. Thanks a lot
Thanks,
for that.
appreciate it.